All right, good evening, everybody. Thank you for joining us for our live options demo. Really looking forward to sharing with you guys some of our tools that we use at NetPicks to trade options on a weekly basis. If you have any questions at any point during the presentation here tonight, feel free to type those into the chat box and I will do my best to get to those as soon as possible. We want to make sure that this is interactive. So I do have content that I want to share with you guys. We'll walk through a number of different trade examples. That way you can see how we trade, but we can certainly veer off course if we need to. If there's any topics that we need to spend more time on, certainly let us know, and we will be more than willing to take some time to walk through those topics. Taking a look at markets here this week, it's been a very interesting week. We've been talking with our students all week, really for the last couple of weeks, about how overbought this market has been long term and how we have not had any type of significant selling pressure on the downside. We've had some selling, but with no follow through. We get selling for a couple of hours and every single dip has been bought immediately. As a result, we are left with a market that's massively overbought, and when you compare it to what we've seen worldwide, there's been some damage done in many different global markets. The U.S. markets are the only area that's been unharmed by the volatility. How long that can last, time will tell, but I do think going into the rest of this year, we will see volatility uptick. We're going to see volumes uptick. I think it's going to be a prime environment both for day traders and swing traders alike. So really ideal for what we look for on a regular basis on the option side. Looking at this daily chart of SPY, we don't use this chart to time our entries to determine where we're getting in, where we're getting out. We use this chart to gauge overall sentiment. I have to make a judgment call. I have to make an opinion on how aggressive I feel comfortable being with the trades that I take. I don't want that to be based off of a hunch. I don't want it to be based off of what I'm hearing on financial media. I want to actually take a look at price action on the charts. I want to take a look at volume to help me determine how aggressive I want to be. And with the massive overbought condition that we're seeing here, I am expecting further selling. Now, it's started to materialize over the past couple of days. We have had some weakness. It has not been broad-based. In fact, the last couple of days, the selling that we have had has been contained to the NASDAQ names, to many of the tech names there on our list. So what I want to see happen, whether it be tomorrow to end the week or into next week, I want to see more broad-based selling. I want to see them come for every sector, for every index product, every stock. I want to see that broad-based selling occur because that's what it's going to take to break this massive uptrend that's been in place. Notice where we found support right at the low of today's session, right on top of the 20-period moving averages, both the simple and the exponential. If you take a look at what has happened over the past few months, anytime that we have tested those moving averages, it's been followed by a significant bounce back to the upside, and in most cases, a new all-time high being met. That's why those levels are so crucial over the next couple of days. We absolutely need to see those broken on a closing basis. Getting below those intraday, it's not enough. Testing them like we did today, it's not enough. It's not going to lead to anything significant on the downside until those levels are broken on a closing basis. So that's our line in the sand on the downside. On the upside, if we do see a reversal back higher off this area of support, the area of resistance that I'm keeping a close eye on is at 291.74. That's the all-time high here back from last week. What is a little concerning here, if we're going to see this market break to the downside, I want to see more conviction behind the move. The volume, we have certainly seen an uptick this week, which makes sense coming off of the long Labor Day holiday weekend. That's typically a stretch where we see action pick up. Historically speaking, that's what normally happens, and we have seen it uptick. We've seen volume back closer to that 65, 70 million share range. So it's not great by any means. I would want to see it closer to 100 million shares over the next few weeks, but it's a start. It's slowly starting to pick up. Going into tomorrow's session or next week, if we can get some selling where we break some of these support levels, it happens on bigger volume, that could certainly open things up for the rest of this year. That's what I'm really looking forward to. Now, going over to the charts, what I want to spend some time on is our options fast track system. We'll also take a look at our Spotlight Power Trader system as well. We have two different approaches at NetPicks that we use to trade options. The first one, the charts that we're going to look at here to start, these are the options fast track charts. This is the system that we use. It's a more active system. We're looking for shorter term movement back and forth. This is not a long-term buy and hold strategy. Our typical holding time here is anywhere from 24 hours on out to 2 weeks. Very typical for us. So I'm just looking for quick pops back and forth. Our Spotlight Power Trader system, which we'll take a look at in just a moment, it's more of a longer term strategy. It takes longer for trades to develop. Once we're in trades, we're typically in for a longer duration. In fact, our typical holding time with the Spotlight system, anywhere from 10 days on out to a month is very typical for a holding time there. The reason I love that approach is it gives me diversification. We all love to be active. I know in my own trading, I like those trades that are in and out in a couple of days. Those are exciting. But I also like how those longer term trades can filter out some of the noise. They can filter out some of the chop and leave me with bigger profit potential over time. So it's a great combination. I have students that use one of these two systems or both. It does not matter to me how you structure it. In fact, we're going to help you along the way should you decide to take advantage of these tools. We'll help determine the best approach that fits your account size and your risk tolerance. This is a chart of QQQ. For those of you that are not familiar with how we like to trade at NetPicks, on an active basis, we much prefer the range-based charts. So when you look at the candles on these charts, these are not time-based. Some of you are using an hourly chart or a daily chart, and those charts have candles print every hour or every day, regardless of how active the market is. The range-based charts, on the other hand, have absolutely nothing to do with time. This is a range chart of 95 cents on QQQ. That means is every candle represents 95 cents of price action from high to low. If we have an active day like we had today, well, you can see over on the right-hand side of the chart, we actually had 8 candles print today. It was very active on the NASDAQ. If things slow down, the markets really start to get choppy and consolidate, we could have a session on the NASDAQ where you might only have 1 or 2 candles on a session. That's really powerful for us because it allows us to react much faster to changes in stock price. If I'm using a daily chart and my system requires a candle to close in order to get a setup, I could potentially be missing out on hundreds of points of movement back and forth intraday. Whereas the range-based charts, they're going to allow me to get into trades much faster. They're going to allow me to hit my profit targets much faster. Now, how did I come up with that 95 cent number? There's a formula that we use. There's an indicator that we have developed at NetPicks that tells us the range setting that we should be using for every name on our list. And that's powerful because we also understand that QQQ moves completely different than Bank of America. Right? Bank of America moves completely different than Netflix. So instead of trying to force feed the same chart setting to work on every market that we trade, we're going to use that formula, and we do it once a quarter to tell us what range settings should we be using on every name on our watch list. It's a huge advantage to us. It allows us to really fine-tune the system to each market that we trade. And we do it quarterly because we also understand that market conditions will change. Chances are, at the end of the year, market conditions are going to be completely different than what they are now. So by using that formula once a quarter, it allows us to use a system that's adapting to different types of markets. It's not a system that's going to break down every time the market conditions change. I mean, we've all used systems in the past that have done that, right? Everything's going well, working great, you're making money. All of a sudden the markets change and the system completely falls apart. We do not want that to happen here with the options fast track system. Now you'll notice the pink dots towards the right edge of the chart. You'll see the pink dots that I'm circling right here. Anytime that you see pink dots on the chart, those represent a short trade. We have a very specific set of criteria that we look for in a setup. Because we have the pink dots here, because we are looking to play the downside, why is that occurring? If you take a look at that indicator down at the bottom, it's the Williams %R indicator. It's a very standard indicator in most charting platforms, but we do use some custom settings inside of it. We'll use that indicator to identify overbought or oversold conditions. In this case, we had a move up above that upper yellow line on the percent R. That's at the minus 10 line. As soon as that happens, that is step number one for a setup. Now, it doesn't guarantee that the market is going to immediately turn around from there. I have to wait for a few additional steps for confirmation. The second step in the sequence, you'll notice that solid white line on my chart. That's what we call our signal line. And I need at least one candle to close below that signal line. Once that happens, you are going to see the pink dots plot, and those are going to give us our entry point, our two targets down below, and our stop up above. The best part about this whole sequence here, all of that criteria is programmed into what we call our trade calculator. When all of that criteria is met, it automatically plots those dots on the chart for us. It doesn't take the trade for us. It's still up to us to manually go in and actually decide what option I want to take the trade with. But because all of that's outlined for me, I can focus on the option side. I don't have to sit there and wonder, hey, am I getting in at the best price? Once I'm in the trade, how long do I hold? When do I get out? All of that is outlined for us. It's a huge advantage. Doesn't guarantee that we're going to win on every trade, but it gives us a roadmap that we can follow, that we know puts the odds in our favor over time, over a whole sequence of trades. Yes, we're going to have winners, losers, and break-evens, but we know that we're going to win more than we lose, and we know that our winners are going to be larger than the losers. That's the key formula for successful trading over time. So we had all of that come into play. Let me get my data box up, and we'll take a look at the exact values of this most recent short setup. This one actually set up back on August 31st, and it gave me the entry point at 185.04. That's the first series of pink dots there on my chart. The entry point was hit on September 4th, came down, touched that entry point. That's where we came in and put our position on. Now, once that entry point is hit, I can either sell the shares of stock short. For those of you that have done that in the past, you know it ties up a tremendous amount of capital, right? So it's not advantageous to a small retail trader. But because we're here to talk about options, let's talk through how we can take this position with far less capital. I came in and I bought a put option here, and I bought the September monthly options. I bought the September 187 put, to be exact. And I bought it for $3.26. What that did for me is I controlled 100 shares of stock on the downside for a little over $300. That's pretty reasonable regardless of your account size. We're not tying up thousands of dollars to put on a position here. It's $300. As long as that stock moves to the downside, I make money. My put option increases in value. Fortunately, it happened, and it happened quickly here in the case of QQQ. We came in this morning, we hit the full target, we were able to close out of the position. We booked a $311 profit. It was a 95% return. We're in and out in less than 2 trading days, and we're talking about close to 100% return. I looked at this trade for a grand total of about 10 minutes from start to finish. I know many of you are working part-time jobs. You're working full-time. You don't have the opportunity there to look at charts all day long from opening to closing bell. You don't have to. If you can come in 1, 2, 3 times a day, I set aside 20 minutes total on a daily basis to look at my charts and manage my own personal trades. So it's something that you can do before work in the morning. You can do it on your lunch break, or maybe once in the afternoon if you've got a few minutes before the market closes. You start to take a look at that. How many people would like a $300 little bump in your income in less than 2 trading days? I mean, that's why I'm attracted to these markets. Now, if you've got a larger account size, sure, you can trade multiple contracts. You start to take this position with 10 contracts. You're talking about a little over $3,000 required to put the trade on. But now you've got almost $3,000 of profit, right, in less than 2 trading days. All of a sudden, that goes from a nice little supplemental income to potentially replacing an income very, very quickly. Pretty powerful return. That's why I love trading options on a regular basis. Now, in fairness, not every trade is going to win. If I just scroll back here, we've got 3 trades shown on the charts. The last 3 trades that we've taken on the NASDAQ ETF have been short trades. If I go back to the left-hand side of the screen, the first trade here was a full winner. Really nice trade, close to 100% return there. We followed it up with a losing trade. Okay, so unfortunately, we talked about this one, with our students in real time. Unfortunately, that trade just flat out did not work. We triggered short, it ended up reversing back to the upside, and we got taken out at a stop. Our losing trades are typically in the 20 to 40% range. So when you take a look at that, if my winners are in the 90 to 100% range and my losers are in the 20 to 40% range, all of a sudden I'm starting to put numbers in my favor. I don't have to win 80, 90% of the time to make money because my winners are larger than the losers. Takes a lot of the pressure off needing to be right all the time. And that's a big mistake that a lot of retail traders are making right now. I talk with traders on a daily basis, and a big mistake that I see being made is the inability to be able to take a loss or to be willing to take a loss. When a stop is hit, when that stop was hit here last week or a couple weeks ago, really did not want to close out of the position. I still liked the trade. I still thought the market was overbought. But when that stop was hit, I was able to close out of the position with a partial loss. Those options that I held still had value to them. By keeping the loss small, I'm able to recover much quicker. If I hold too long and that trade goes into a 100% loser, that's going to take potentially a couple of winners to battle back. Right? And that's where most retail traders get off track. All of their losses are very large losses, and their winners are small winners, and that's not a good position to be in long term. The numbers just don't work out. So we took a losing trade there, and then we followed it up with the position that we just talked through that was closed out today with a full profit. So now out of the last 3 trades, I've had 2 full winners and I've had a loss, and I'm still up money in a big way. That's exactly what the system is designed to do. We look for a minimum of a 2/3 win rate. I want to win 66% of the time at a minimum. If I can do that and combine that with the fact that my winners are larger than the losers, that's going to set me up for really nice, consistent results over time. Now, here's where it starts to get really fun. Notice what I'm going to do here. I'm going to switch to another product. Let's go over to Apple. Does this chart look familiar? Very similar look and feel to QQQ, right? Same indicators, right? We're looking for the same criteria in a setup. Nothing changes here other than the range setting that's being used on the chart. It was a 95-cent range chart over on QQQ. We're now looking at a range setting of $1.46. So every candle on this chart represents $1.46 of price action from high to low. The system doesn't change, but now we're fine-tuning it to the market that we're looking at. We had a short setup just like QQQ. Okay, this one triggered in yesterday, and we talked about this one in our training room with our students. So we triggered in yesterday. 225.67 was the entry point. It's the first series of pink dots right there. Those dots printed because we had an overbought condition on %R down at the bottom. You can see we got above that upper yellow line. I had a candle close below my signal line. Right, you had it close right there, and we had the entry point touched. Everything fell into place for me. There's no guesswork involved here. Everything's very clear cut. It's either a setup or it's not, and if it is a setup, I know exactly where to get in and where to get out ahead of time. Cool part about this one is fast forward 24 hours. We came in this morning and we already hit first target. The first target does a couple things for us. It's what we call our money management level. If I have multiple contracts on, let's say I bought multiple put options or maybe multiple put spreads, I have the opportunity there, if I want to close out of half of my position and book the partial profit. It's not going to be a huge profit, but it allows me to reduce my risk on the overall position. I'm still going to keep the second half of my trade on, but now I'm going to move the stop down to the entry point, and the calculator does that for me. It moves the stop from the full level up here all the way down to the entry point. Great position to be in because now I'm playing with house money at that point. Well, notice what happened earlier today. We continue to see a move to the downside on Apple, and the stop continued to move down. So now my stop is down at 224.27. That stop is in place for tomorrow. Worst case scenario, if we get a higher open tomorrow, I'm going to get taken out of the trade with a partial profit. Okay, so not the worst scenario to be in. I still have the opportunity to hit full target on the second half of my trade. In worst case, I'm out with a partial profit. I don't have to sit there at the end of my day and try to, spend a couple of hours going through charts and trying to determine, should I be in this trade or not? I can literally spend 5 minutes either this evening or tomorrow morning and see that everything's outlined for me. My plan of attack is already in place for tomorrow on Apple. And worst case, I'm out with a partial profit. That's a great situation to be in. The system is designed to put the odds in your favor and to simplify things as much as possible. I understand a lot of us, we're very busy, right? Everybody these days seems to be going in, everybody's going in a gazillion different directions, right? You've got so much going on a daily basis. You just don't have time to spend 8 hours a day glued in front of a computer screen. I want you to be active in the markets. I want you to take part in these trades, give yourself that profit potential without a large time commitment. My whole goal with my personal trading is to look at the charts for about 20 minutes a day. That's how we structure all of our training. That's how we teach our students. It just gives you a tremendous amount of flexibility over time. So really nice trade there on Apple. But in fairness, I mean, the NASDAQ and Apple, I mean, they're very correlated products, right? Let's take a look at XLE. This is the energy ETF. Well, now I've got the blue dots on the middle of my screen. Let me go ahead and zoom out just a little bit so it's easier to see. Anytime I see the blue dots on the charts, those represent a long trade. And quite frankly, I don't care whether the market heads higher or lower. I couldn't care less. I just want it to be active. I want it to make movement back and forth. I want there to be good volume. And as long as that comes into play, I can make money. Oftentimes you hear traders so focused in on playing the upside because that's what financial media preaches to people. You turn on CNBC and it's just a bunch of cheerleaders on a daily basis trying to get the market to go higher, right? I couldn't care less. Does not matter to me. We know with options, I can play the market higher or lower. We talked about a couple of short trades on the first couple of examples. Now we're taking a look at a long trade on XLE. The indicators remain the same. I had an oversold condition on percent. I had a move below minus 90. That indicates to me that we're oversold in the near term. Doesn't mean the market has to immediately reverse higher. It's telling me in the near term, price action's reaching a point of exhaustion. We very well could see a period of chop or even a reversal kick in. On its own, that is not enough for a setup because I know oversold can stay oversold longer than any of us expect. So I have to wait for confirmation, and just like we talked about earlier, that's where our signal line comes into play. That's that white line on the chart. I need at least one candle to close above that signal line, which happened here back on August 16th. And the very next day, we triggered in on the long side. So my entry point was at 73.34. We triggered in the next day. So in most cases, when we have a setup print, you typically have a period of hours or even a few days before that trade triggers in. So it's not a big rush, in most cases to get that order placed. You'll have plenty of time to do so. In this case, we could have bought the shares of stock, but as a retail trader, I don't want to tie up a bunch of capital buying shares of stock. I would rather use the leverage that the options offer to still put on a bullish position, but with far less capital. So once that entry point was hit, we came in and we bought the call options. All right, we spent a couple $100 to buy the call option. Everything's outlined for me. You can see my 2 target levels up above, 2 series of blue dots, and then my initial stop down below. Once this trade triggers in, a couple days later, we came up and we hit the first target. Once that level is hit, I do have the opportunity. I have the option there if I want to close out of half of the position and book the small profit. At the very least, I'm going to move the stop up to the entry point, which is exactly what the calculator did. You can see the stop moved up to the entry. Now, price action, fortunately for us, continued to move higher. And as it moved higher, the stop also moved higher. It's what's known as our trailing stop. So all along the way here, I'm locking in profit. Now, fortunately here, the stop never came into play. We ended up hitting that full target. Once that full target was hit, we closed out of the position, and that one was around an 80% return. Again, it doesn't guarantee that we're going to win on every trade, but like we talked about on QQQ, we know that we're going to win more than we lose, and our winners are going to be larger than the losers. That's the key formula that we have to make sure is in place, and that's what the system accomplishes for us. Now, oftentimes after a winning trade, it's natural for people to say, hey, I want to get into another setup right away. Right? You have a full winner on QQQ or Apple or XLE, and all of a sudden you're saying, okay, that felt good. I want to repeat that process. Let's just jump right back into a new setup. Here on XLE, the move to the upside was great. We booked the full profit, but notice on %R, we did not have another overbought or oversold extreme. So there's no reason for me to take another setup. I'm going to stay patient. I'm going to wait for the system to print another series of pink or blue dots, because I know if I do that, the odds are going to be in my favor. If I start to force trades, if I feel like I have to be in a trade 100% of the time, a good majority of that time, I'm going to end up being in very questionable setups. As difficult as it is, because I know we all want to be active all the time, at least on XLE, there's no reason to force a trade. I know if I'm very picky, if I wait for my criteria to develop, the odds will very much be in my favor over time. And that's the best part about having a system that can adapt to all different types of markets, all different types of conditions. I can start to build in different layers of diversification. I can set myself up with a watch list of 20 different markets, different stocks, different ETFs. That way I get the frequency of trades that I need long term. And especially in today's market, we talked about it right at the top of the session. We have not seen broad-based movement. We have certainly seen over the past couple of years, in fact, we have seen markets where you'll have a certain sector or a certain index very, very active. Fast forward a month or two, and all of a sudden you've got a different sector that's very active. So diversification is more crucial now than it ever has been. You have to have a good mix of markets, because bottom line, no one knows what market or what sector is going to heat up next. So the more diversification that you get, the better your overall results will be long term. You can look at a watch list. I personally trade a watch list of 30 markets. Outside of that list of 30 names, I don't care what's going on. My universe is so focused on those markets. It allows me to get used to the markets that I trade. I get familiar with how liquid the options are, how aggressive can I be on the pricing when I'm placing an order. That's a huge advantage. I'm really not a big fan of scanning software, which I know a lot of people use. The problem that I have there is oftentimes you're left trading names that you have no experience with. You have no feel for how they move. The chart pattern might look great, but if that's not a very liquid product, if you don't have any experience with that product, I think it's going to be very difficult to find success over time. I would rather get to know the names on your list, trade the same names consistently, and I think you're going to see far better results over time. Now, I mentioned we've got a couple of different systems here at NetPicks. So far, we've been talking about the options fast track system, which is our more active system. Shorter holding times, we're looking for smaller profiles on the trades, which a lot of people like. I love that, but there's also a time and place for the longer term trade. So let's go ahead and take a look at the Spotlight Power Trader system. When I pop up these charts, you'll notice that we still have everything outlined on our charts in real time, so there's no guesswork involved. If I take a look at Twitter, let me go ahead and clean this up a little bit. If I take a look at Twitter, you will notice that I had pink dots over here on the right edge of the chart. This is actually from earlier this week. For anybody that trades Twitter, you know it's been a rough week for Twitter. Jack Dorsey was being grilled in front of Congress, you know, for different security reasons, and as a result, the stock got hit. I'm not a big fan of fundamental research. I don't pay attention to news. I'm a pure technician, meaning I focus exclusively on price action on the charts. I don't try to read the news and interpret the news in a way that I would make an investment decision off of. Bottom line is no one knows what the news is going to be, when the news is going to come out, and no one knows what the market's reaction to that news is going to be. I think it's very, very difficult to trade off of any type of fundamental research. It's my opinion that everything that we need to know is going to be priced in to the chart. The price action on the chart is going to tell us everything we need to know. So you can see just this week, Twitter's been beat up. It has significantly sold off. I couldn't care less what the reason is for that sell-off. What I care about is that the system gave me a short trade. The entry point was hit. The first pink dot here on the downside, that was my entry point, and we're already starting to hit targets. I got short here at 34.28. You can see my first target right here, the first series of pink dots on the downside. We hit those first targets in less than 24 hours. We still had the trade going. My full target's down at 30.22. So if we see any type of a lower move tomorrow, I know exactly where to get out of the trade at. And notice what's happened here along the way on the downside. The stop has continued to move lower. Worst case scenario, I've got a partial profit booked. You take a look at this and you're saying, okay, these charts look very similar, right? What's the difference between the systems? Well, the Spotlight Power Trader system utilizes a time-based chart. This is a 195-minute chart. What that essentially gives you is 2 candles per day instead of 1. The daily chart's only going to give you 1 candle a day, and the problem I have with that, oftentimes it's a slow-moving chart. It lags. It ends up getting you into trades late, and you need a pretty big follow-through on that move in order to book a profit. The 195-minute chart giving you 2 candles a day, it just speeds it up a little bit. Gives us more frequency. It allows us to hit our targets faster. It's a better flow on the chart, in my opinion. Now, the criteria that goes into this setup is very, very different. You're going to see that pink and blue histogram down at the bottom. That's what we call our oversold and overbought indicator. So what happened here is, notice my pink bars back on the left. We got those pink bars to go above the 0 line. That gave us an overbought condition there. We then had a close below our balance line, which is the dotted green line, and that gave us the entry point. So everything's built into the calculator. There's no guesswork involved. There's no trading off of hope, right? You're not sitting there just saying, well, I hope I'm right. I hope I'm getting it at the right price point. Because we know the system puts the odds in our favor, I can put this trade on with confidence. I can come in here and buy the put options knowing that more often than not, I'm going to make money, right? I'm going to win more than I lose, and my winners are going to be larger than the losers. If I continue to take trades following that formula, that's going to set me up for really good long-term success. So now, again, like we talked about on Apple, everything's outlined for me for tomorrow. There's no guesswork involved. I don't need to spend a ton of time this evening determining what I'm going to do tomorrow. Everything's very clear-cut for me right there on the chart. Now, if I zoom out, let's go ahead and I got to go over to my other workspace here. All right, let's take a look at SQ. This is Square. Now, the beauty on the system is, the bottom line is, again, I don't care whether the market moves higher or lower. You have a market here this week that's showing some nervousness. We're starting to see some sell-off in the tech names. It's natural if you come in today and see the NASDAQ down 100 points, it's natural to say, get me out of all of my long trades. I do not want to play the upside. I don't want to get hit. I don't want to lose money if this market continues to move lower. Here's why that's so dangerous, just basing your trades off of emotion. Look at what Square has done over the past number of weeks. It's been a straight move to the upside. Had I closed out of this trade early based off of emotion, when I saw the market start to roll over here, I would have left just a home run trade on the table. This setup actually printed for us and triggered in all the way back in early August. It's the blue dots that I'm highlighting right here on the chart. My entry point, target 1, target 2, and my stop down below. So we've been into this trade now for over a month. Very, very different than the trades that we've talked about so far. The options fast track trades were in and out in a couple of days. Now all of a sudden we're in a trade for a month, which may seem like a long time for some people, but you look at this and that patience is certainly paying off. We got into this trade. We bought our call options when that entry point was hit at 72.63. Here we are a month later, and our stop, look what's happened here along the way. We have not hit our full target. Our full target is not up until 99.46. But look what's happened as we continue to move higher. Look at my stop dot. It goes from the full level down here at 63.57. We're locking in profit the whole way up here. So now going into tomorrow, my stop has been moved up all the way to 86.44. Okay, remember, we got in at 72.63. We've got a $14 move to the upside here that we've already locked in. Okay, on the call options here, you're talking about 300% on the return. You're talking about doubling and tripling your money over the past month. Some people don't like to hold that long, but when I start to see the opportunity to double and triple my money, you better believe that's attractive to me. And this is why it gets so powerful. The options fast track gives me more activity, right? It kind of fills that part of my trade plan. I like the faster moving trades. But a portion of my portfolio, I also want to have some of those longer term trades on. I'm not talking about holding for 6 months at a time, but if I can hold, in this case, for a month and triple my money, that's a great complement to some of the other trades that I have going. That's the missing piece for a lot of retail traders. They just don't have near the diversification that you need. And oftentimes when people hear that word, you hear about diversification and you immediately think about just having different markets on your list, right? And that's certainly a big part of it. But we're big believers at NetPicks that diversification can come in a couple of different forms. Yes, it is trading different markets, different stocks and different ETFs, but I also want to mix up my strategies like we just talked about here this evening with the options fast track and the spotlight power trader, and then also to take it a third step. We're not going to have time to talk about it tonight, but I also like to mix up my different option strategies that I use. So far, we've talked about long calls, long puts. We also like to take a variety of different vertical spreads as well. It's another way for us to build in another layer of diversification. Okay, we do love to use credit spreads at NetPicks as well. For those of you that might be experienced options traders, you're saying, okay, long calls, long puts, yeah, very, very basic, and it is. But we also will get into how to trade a credit spread in our training as well. How do we come in and sell a call spread or a put spread? How do we sell an iron condor? It's not something that you have to tackle right away from day one, but when you start to see the power of those trades, it's a great way to add in yet another layer of diversification because now we're actually getting paid to hold those positions every day. We put the time decay in our favor every day. That's why it's, in my opinion, options give you more flexibility than any other market out there. A lot of people love to day trade. They love to day trade the stock and futures and Forex markets, and that's fine. But you only have one way of making money on those trades. The market has to be moving back and forth in order to make money. When you start to trade options, I can make money multiple different ways. When you start to sell a credit spread, you're going to give yourself 5 different ways of making money on every trade. You're going to be able to control your risk much better trading options than any other market out there. I'm not saying you need to trade options exclusively. I personally do myself, but it can be a great complement to some of your other trading. Maybe you are a day trader. That's fine. Continue to do that. But this is another way for you to get a good mix of trades going in your account. And I think that's going to give you more consistency long term. And that's the #1 topic that I'm hearing from people right now. They want to increase their profitability. And this is a great way of doing that. So I'm not here to sell you anything here tonight. You're not going to hear a sales pitch. Yeah, I'm not going to offer you a sign-up link. That's not the design of this demo. What I want you to do is to see the power of having a system in place that will guide you every step of the way. That's going to put the numbers and the odds in your favor, and that's what you have to have in place, whether it be with our system or any other system out there. You have to have an approach that you can commit to 100%. An approach that you can stay disciplined to day in and day out. If you don't have that in place, I highly encourage you to take a big step back. Get that in place before you put another dollar of your hard-earned money on the line. Now, if you'd like to connect and talk through these systems in more detail, if you have questions, I would be more than willing to connect and help walk through any questions or comments that you might have. My direct email is mike@netpicks.com. Feel free to send me an email. If we need to set up a phone call, I will certainly be willing to connect. We're not pushy sales guys here at NetPicks. We're traders. I'm a full-time trader myself. So if we connect for a phone call, it's not going to be a pushy sales pitch. I want to help you hit your trading goals. So if we can help direct you to the right system or to the right markets, we are more than willing to do that. So I did record the presentation here tonight as well. So if you're logged in late or didn't catch part of it, we will actually get the recording posted to our blog, to our YouTube channel, and then you can, again, email me directly and I can get you the link also. Again, the email is mike@netpicks.com. All right, so I'm going to start to wrap it up here for this evening, let you guys get on with your night. Again, if you have any questions at all, don't hesitate to contact us. We will be back here. We'd like to hold these demos every couple of weeks. So our next one will be focused in on the day trading side of things with futures and forex. So my colleague Troy will handle that next upcoming session. All right, so really appreciate you taking time out of your busy schedule to join us here this evening. Enjoy your weekend, and we look forward to talking with you guys here in the near future. We'll talk to you then.